Good morning, everyone, and welcome to the European Crossover webinar. Sorry about that. I was looking over these IEA headlines, and I didn't even realize, heck, we were at the top of the hour. Time to go in and start the webinar. So apologies there. I was over here kind of joking around right now with Greg in the chat room and didn't even realize. But anyway, these IEA headlines have come out, and crude oil was already weaker to start with. I'll go on and throw that up, and we'll touch on everything else. Obviously, we got whacked in the right at the, when kind of trying to talk, can't even talk right. When we opened, we actually started pressing even higher. You can see here we made it all the way up in here into this, bear with me, up into this, actually beyond the 51.6, made up here to above here to almost a 52 even here. And bear with me. And when we had that headline come off, actually I was kind of looking to the side of me, and also I saw a drop, and I guess it was a spooze. Now so I started looking around, and everything starts coming a bit unglued here. And doggone it, what do I do? I just knocked off the thing. Hang on. Oh golly, doggone it. Have to reload it. But anyway, I actually closed out the chart and didn't even mean to go and do that, and I'll have to reload my stuff so that I don't lose it. But anyway, we started falling off, and we fell off, continued to go on and roll off. And of course, now we're pressing even lower. But obviously, with these numbers, we pressed even further down here at 50.80. I was looking on the charts, but obviously I closed that chart off accidentally. I'll try and let me try and open up. I know what I'll do. That'll open it. Yeah, that should open it up. Had to reload everything up. I don't even think it's saved. I made some chart updates on this, but anyway, let me get back to this because we're pressing lower. Yeah, I think I didn't even save on that. Doggone it. But we're actually, if you can look here, we have the potential to move down here to this little zone here between 50.66 and 50.50 actually, and we're still pressing lower. Obviously, those IE estimates tend to roll us over. This makes an impact, obviously, with you would think with crude oil also. I mean, with the Gadala CAD, but those headlines had just hit the wires right when we were coming on. Like I said, I was getting ready to come on, and I didn't even realize it. That it was already time to go and start the webinar. But anyway, that being said, we got it was the amount of deaths, not deaths, but new cases. I think it was like 14,000 reported new cases. So that really kicked the stuffing out of the market. So we actually saw the S&Ps come off this on a 2-hour, but if we look, you can see here, we were trading here at 33.82, and then also the bottom came up. We rallied back up. I had said on the chat room, resistance would be at 33.73. We have a little zone here, and we made it to 33.73.5, and then we kind of rolled back, and then we've since been continuing to go lower. So if you look at it, we're 20 lower from what we were in Asia once we made those headlines. Obviously, some concerns there. And let's go on and move into the currencies, and let's go on and kind of like all over the place. Hang on. I was going to review these, view a couple of things, and all of a sudden those headlines, IEA headlines, came out and started going to make an impact. Let's go and take a look where we're at right now, though. Coming today, we had German CPI final. Came in, Reuters published for minus 0.6. We came in at that 0.6. And let's see, we have Italian data. That's not till 5 a.m., so it's going to be in another almost a couple hours away. Here on the Ipsos, which is a consumer sentiment, you can see that. So the Ipsos consumer sentiment for the UK, Germany, and Italy, as well as Spain. It's all coming out at 6 a.m. Eastern time, okay? Then we come into today. It's Thursday, so we're going to get our initial jobless claims, but we do get core CPI in the U.S. and let's see, Cleveland CPI. So that's about it there. Anyway, getting back in here. So we did go and see the dollar index. I guess we'll hit these two key and then before we'll go and touch on the stories here. Looking at the cash dollar index. You can see here we closed higher. Now, one of the things I noticed in the analysis, and we'll get to that, we had our bias chart resistance at 99.11. That's still in place, but remember, this close that we've been looking at since last week said, hey, look, if we close above 98.42, the door's open for 99.70. And it looked like we may take a little bit of pause there, but we closed strong on the day yesterday, or closed higher, even though we were already at these heights already. We still managed to close a little bit higher. Obviously, i.e. correspondingly, the euro went to new lows again, trying to hold our own. We'll get to some levels that we're looking there. That being said, let's go on and take a look at the news, and then we'll move into the analysis. So the Australian New Zealand dollars burdened by the coronavirus confusion. The Australian New Zealand dollars wavered on Thursday after China reported a steep rise in new coronavirus cases and deaths, challenging hopes the disease was being contained. Health officials in Hubei said that 242 people died from the flu-like virus on Wednesday, while the number of new cases surged to nearly 15,000. And that's what really shook the market. The sudden increase stirred concerns the economic fallout from the outbreak could be greater than first thought, though markets were reluctant to take prices too far given the uncertain situation. As a result, the Aussie initially dropped 20 ticks to 67.07, then steadied around 67.27. We are seeing crude now on its lows at 67.78, 67.77. 57.77. There is some key area of around that 50.65, 50.50, but certainly makes sense with these IE reports that they'd be sliding. Anyway, let's go on and get back here. So the Kiwi fell almost 30 ticks as the first to the low is 64.32. The RBNZ governor, Christian Hawkesby, said it had switched to a neutral bias on an interest rate due to an improving local economy. He emphasized the bank would review the position should coronavirus look like having a deeper and longer impact than currently expected. Local environment development since November had some easing of tensions, certainly justifies taking a further cut off the table, said Jared Kerr, chief economist at Kiwi Bank. But we think it's premature to discount the chance of a further cut this year. We're not as confident that the impact of the coronavirus will be contained to the next few weeks and dissipate without need of assistance. Markets are pricing in a little chance of a move at the policy meetings in March or May, but around a 44% probability by the end of the year. Also speaking on Thursday, RBA Governor Philip Lowe reiterated his concerns that a cut in local rates could be a welcoming on borrowing binge at a time when home prices were already rising. So RBA is not really looking to go and make any action themselves, citing that, as I said, with the housing industry, they're concerned that they're going to kick off some additional borrowing, which is what they don't want to have happen, or at least that's what they're saying. So the yen gains, won and Aussie down as virus cases and deaths rise. The yen rose from a 3-week low against the dollar on Thursday as investors sought havens after China's Hubei province saw a sharp jump. And the Aussie dollar uses a proxy where we said fell to 67.24. World Health Organization also likened the epidemic's threat to terrorism, underscoring the anxiety in financial markets. Chinese policymakers have implemented a raft of measures to support the economy, Elsewhere in the currency markets, the dollar traded at 108.68 euro, closing at its strongest level in more than 2 years. In contrast, the euro wilted on Wednesday after data showed Eurozone manufacturing output plunged more than expected in December, boding ill for a fourth quarter Eurozone gross domestic product data that's due on Friday. And lastly, the euro plunges against the Swiss franc as China's virus cases soar. The euro fell to a 4.5-year low against the Swiss franc on Thursday as the yen gained as investors sought safe havens after China's Hubei province news. We've already gone over that. Taken together, it suggests a fading the overnight reaction, said Ilse Lignos, global head of FX at RBC. The initial move was to dump risky assets. However, after weakening to a 3.5-week low of the day before the yen gained against the dollar on Thursday, the euro dipped to 1.0622 francs, the 216 trough, the lowest since August of 2015. When you see the numbers like this, you can't help but want to move to risk-off trades, which means you buy the yen and sell stocks at Ayoko Seta with Mitsui Trust Bank in Tokyo. So with that, let's go on and move into the analysis. So it says the euro failed its minor rally, resuming its downward slide. Support ahead is 854, followed by 838. Resistance is 910. So you can see here, I have to pull this a little bit further back. There we go. You can see we're coming up with this 854. And just a dip below that gives us 838, which I don't have marked up, but you can see here, this would potentially get us a solid support here at 803. But ahead of that, you can see here we've got 854. So kind of an idea here, if you're looking at, how much further can it fall? Where will I see some demand? On this daily chart, you can see pretty decent demand, 854, with a potential slide here to 838. So looking here, it's going to be 854.38. Right there. So we're pretty well overdone here. We may need to go in and take a little bit of a pause here. Moment. And if you look at the resistance here, 910, not a whole lot, but it kind of gives you it frames it as to what we're looking at in this area. The 854 is a little bit lower. We didn't quite make it there, but if we get that, tomorrow we've got some key data coming out for the euro. So you're looking at 854, 838. So you're playing to the short side. Probably if we do take that dip, probably that 854 to 838, you can see the 854 coming here and potentially dip to 838 is where you probably want to take some off. Although, like I said, if we'd be rolling into the end of the week, some folks may not even want to take off anything if they're short. But that being said, that's where we're at here on the euro. Let's go on and move into the cable. So the cable's hovering just below the pivot of 2980. You can see that big red pivot. It's been around for, already a couple of years or so. Resistance will be 3030, followed by 3072. Support remains 2842. So 2842, right here is what we're looking here. It's 2842. Still remains support down here. If we do go and take that dip lower, and 3030. Why the heck they did that? Hold on. With that being said, let's go on and move into the Aussie dollar. So the Aussie mildly added on to the gains, but was unable to take out resistance at 67.62. Resistance for Thursday is going to be 67.89. Obviously, seems like a bit of a far-fetched move here, considering what we've seen here with that coronavirus news that came out in the Asian session. But nonetheless, that's what we're going to go on and have it there. You can always make the case that it comes at that level, but we're giving it a little bit extra room here since so quite a bit oversold. If we do get a bounce here, doesn't seem likely, but we've tested this lower region area here. So the upside is going to be 67.89 with support at 67.04. Looks like we came down and we came down here to that 67.04 area. So once again, 67.04. 67.89. And on the Kiwi posted a short covering move, closing above 64.60. Kiwi level above remains a weekly pivot, which is a 64.93, and support is going to be 64.18. So you can see here, we did close. The dip wasn't as much as you would have thought, considering the coronavirus news that broke out. But once again, like I said, we're looking at 64.18 with 64.93. These markets are still relatively quiet. But like I said, we've updated these bias charts, resistance and support. And resistance still remains this key weekly level, which was also the prior breakout level before we completely fell apart. And with the dollar CAD faltered on Wednesday, pairing back to 32.36. A daily close above below those lows opens a challenge to 32.07. Resistance would be 32.79. Mentioned in the chat room that was an area of support there, that right down there at that 32.40-ish area, 39. So we'll just go and keep it right there at 32.36. If we break below that, it opens the door for 32.06. So let's just go with the right there at that area, which was 32.36. And on the upside, 32.79. If we get a close below 32.36, it opens the door for a move down to 32.07. We've already come back a bit, and it's been trading relatively tight, so we'll look for this market to kind of hold its own. But once again, resistance is going to be right there at 32.79. Now, dollar peso, no change. It's still the same thing. It's exactly the same analysis we had from before. The only difference is it is going to be that the resistance is going to come in at 1878. Which we had already, and we had 1862 with the potential to move down to 1851. Actually, we would think that we can hold now, but the odd thing is despite the sell-off in equities, we're still not even rallying hardly anything at all. Bit of a surprise here, but it's 1862, 1878. So no change here, essentially for the peso. Peso, Dalian remains on the precipice of a breakout, but the resistance remains 1010. On a closing basis, that would allow a run to 1052. Support is 964. So we've gone and pared back on this coronavirus. So we have our support today at 964. That's still in place. You can see here. And our resistance we have at 1007, but the key is 1010. If they were to break out, it has to be 1010 on a closing basis. So we'll just update that for 1010. But 1007 is our clear number here. There. It'd have to close above 1010 on a closing basis. That would shoot us up to 1052. Right now, we're just stuck. For right now, we're not. We'll see how we close today, but certainly the risk with the coronavirus has opened the door for this market to move lower. And lastly, we'll move on to the cash dollar index. So the dollar index closed at a new high for this run. Overall target 99.70 remains in place. Initial resistance 99.10 is also still in place with support at 98.61. So we had that since yesterday, 99.10. High yesterday was 99.04, maybe 05. And the only thing is we're bumping this up to 98.61 for support. We were looking for this pair to kind of take a pause up in here. And you can see here on the 2-hour chart in this area here, and even looked a little bit of exhaustion, but we pushed back up here. You can see the 99.10, actually it's just a hair lower, but kind of paired back. We'll see what happens. Maybe Euro can try and make a little bit of a stand. With that, we'll move into the cross rates. We did see a decent little rebound here in the Kiwi yen here. And now we're kind of stuck here in this area right here. And this is the last part of the lower zone that we broke from, which is at 70.98. Basically, call it 71 cents even. We're struggling a little bit. We closed above it yesterday as we found a little bit further short cover, a little bit of stronger move. But we're struggling just a bit here. Obviously, with some risk off, but the same token, the yen is weaker also. So potentially have the opportunity to move higher. Resistance at this point, and it looks like we just about tagged it anyway, is coming in right there, which is 71.24. We actually had it even higher because we had actually moved it up to here, which is 70, came in at 71.44, which is what we had before. But I think we'd have a little bit of a tough time right now. So we're going to go on and just adjust it down for today for 71.25. Support's pretty clean here. Right there off of this high, which is going to be 70.55. And moving into the euro yen. Well, surprise, surprise. I mean, you know, the euro is once again continues to take a beating. Where we're looking at here, 1935 is a 50%, which confluences here with 1925. We'll go with the level, but which is the 1925. But obviously, we have support here also with the 50% back at 1935. So we're going to go with the 1925 for our support. On the upside, well, we can see right here, fairly tight. I'm going to keep it tight just there. So let's get a little bit closer looking here. $19.84. Give it just a bit of an extra. See the touches here from this low and this low right there. So it's going to come in at 1991. 1991. Okay. And I was just listening to some headlines in my ear. Kremlin says they haven't decided on oil cuts yet. They will decide on oil cuts in due time. So So we did go in and see the slide here with the euro as the euro continued to weaken. The only reason it found a little bit of strength here is because the Aussie came off, obviously, with the coronavirus. So we do have, and we did come into a key area here. So I'll give it that, which is right there. You see that 61.36. That's going to be our support, 61.36. We may have the potential to move a little bit higher. As the Aussie is going to continue to remain under pressure. So resistance right now is going to come in right there, which is just above those days highs, the days highs. It's going to be at 60, let's call it 62.37, 62.37. Well, actually, we had 62.38. Great, fantastic, right there. So that's going to stay the same as it said. This has actually been a decent pair, I guess. Well, you know, we were trapped for so long. Remember, we kept joking about the no, I'm weaker, no, I'm weaker. And then we saw, which is to probably be expected because such a tight range, we saw these stops blow out on the upside and then turn around and give it all the way back, one little moderate rally, and then come all the way back down again. And right now, we may be able to see the euro odds strengthen a bit more in light of the Aussie's probably still going to continue to remain impacted, more so because of coronavirus, more so, I said, than the euro. Same here with the Euro Kiwi. We fell off, but as I mentioned, because with the coronavirus, may see a little bit of a additional strength. We did come right here into this support here, which is 68.04, and this support level that we do have, it was below from what we were even yesterday, but for bias chart. But you can see here where they're going to find that level of demand, 68.04. I would expect that to go and hold, but we can see a little bit further move. How much further? We'll probably have to go and move into the 2-hour chart because we just have a little bit of a mixed bag up in here. Look at this, up, down, up, down, up, down. Go and take it to the 2-hour chart, see if we can see a little bit closer level. Right there. If they can go and add on to this, it's going to come in at 69.15. 69.15. Oh, we had 69.16, so there you go. With that, let's go move into the Aussie yen. Well, we did have 3 straight up days, and we did have 3 straight up days, and then we've kind of taken a pause up here at this 74.02. One, two, three, and then a bit of that's to be expected. We did actually have our resistance yesterday at 74.32. We came up to we came up to 74.32, which is where we ran out of gas. There's yesterday's bias chart resistance 74.32. We'll go on and keep that in place for today. Potentially, this market could come all the way up here to 74.51, but we're at 74.32, and that's where they ran out of gas yesterday at 74.32. Support, I think, is still going to be relatively tight. So let's go right here at 73.62, which is not much lower right at the day's lows. So 73.62. And let's go move into the guppy. We're just not moving much on some of these pairs at all. Same thing with the guppies, 3 straight up days here. And then you can see here, we've taken a pause at this level here, which is 4270, 4271. We'd actually given it some more room. We actually had our resistance at 4307, but it's running out of gas, or it's having some difficulty at the 4270. But as far as risk level, or what the risk would be, I like that 4307. So that's still going to keep it in place. 4307, which we had from yesterday. And support, same here, no changes, 4178. So we're trapped in a relatively tight range. As I mentioned the other day, is we just seem to be going nowhere. Can you imagine? Look how much volatility we were getting before, and now we're just in no man's land. We're basically treading water. We move, but we just tread water for time. Same thing here. Look at this. We continue to tighten up here. Here's a sterling odd. And once again, we've had some pretty good moves, which you look over, like a 3 or 4 day period. Look at this. All the way up, up, down. And now we're just condensing in this very tight range here. See that right there. There we go. So you can see that here. It just keeps getting tighter and tighter every day. Risk on the upside is going to be right there. Well, it's actually, we ticked it off, which was 93.20. We had 93.12. It's going to be 93.20. But we should be able to hit some stops. On the downside, here's that lower zone here. And there's that 92.07. So no changes here. We're just in a very, very tight range. So Euro staying relatively quiet. And it's probably going to stay that way with limited upside. Here's for tomorrow, okay? We do have Spanish GDP, Eurozone GDP. This is what's going to keep this market probably with, if you're looking for the upside, is going to keep it with the ball and chain. And one of the things that we looked at here with the Euro, You can see we're coming up with this 854. Now our support, it's 854 with some additional support at 838. So potentially, like I said, we can take another dip tomorrow. Although coming into a Friday, if they press down that low, you probably find people who won't be willing to take the shorts off. But we would have some support there at 854, 838. They're going to have a tough time, I think, moving much higher today or a whole lot higher. Resistance comes in at 910. We do have this resistance level here just at 897, the daily. Because like I said, with that GDP and as weak as Europe's been, you'd have to think that the pressure is going to remain there. That's all we have. As I said, we talked about the S&Ps. They're on their lows right now at 33.59. We'll take a quick look-see on that. There's a 2-hour chart here. Some minor support coming here at 33.57, not too far away here. Minor support, but you can see here quite a ways off from where we were in Asia at 33.82. So we've come off a decent amount, not a whole lot, but we'll see if this might at this point catch some. You can see, boy, what a steep run this was here. Look at this. Steep angle. Realistically, probably where they can go in and pull back to. The trigger point is this 33.32. That's what got things clipping on the way up. So if we were to add on to that, look at that 33.32, and the line in the sand is at 32.90 here. 32.90 is the line in the sand. We break that then. But like I said, for right now, if they come into, I'd look at 32.42, where they could punch down. We have some minor support here, 57 and 53, but 42, you'd see a bounce probably, and then late in the day, not saying we're going to be down there, but if we were to lose 33.32, then you'd see this market roll further. And maybe that might be the case as concerns of the impact and who wants to hold it for the weekend if we see, not saying that we will, but if we see a further uptick in those new cases, people may want to take that risk off for the weekend. That being said, thanks for joining us here on the European Crossover webinar. We'll see you in the chat room. Have a good day.